Wealth inheritance and estate planning. Introduction. Wealth inheritance and estate planning are among the most crucial topics in modern society. In personal financial management, they not only involve the arrangement of individual assets, but also concern the future and stability of families. Wealth inheritance entails passing assets and values to the next generation to ensure the continuity and development of family wealth. Estate planning, on the other hand, is the key tool to realize wealth inheritance, ensuring that assets are effectively distributed and managed after the owner's passing through clear planning and arrangements. However, despite its obvious importance, many people still lack sufficient understanding and awareness of wealth inheritance and estate planning. Some may overlook this issue until faced with emergencies or unpredictable events that highlight its significance. Nevertheless, early planning and preparation are crucial for achieving effective wealth inheritance and estate planning. In this article, we will explore the importance of wealth inheritance and estate planning, as well as the fundamental strategies to achieve this goal. From the significance and impact of wealth inheritance to the basic steps of estate planning and effective strategies, we will provide practical advice on how to ensure that your assets are managed and distributed appropriately after your passing. Additionally, we will delve into the connection between wealth inheritance and family values, and how estate planning can be used to perpetuate and uphold the values of the family. The significance of wealth inheritance. Wealth inheritance encompasses more than just the transfer of assets to the next generation. It represents the continuation of family values, historical legacy, and societal influence. Here are several key significances of wealth inheritance. Continuation of family wealth. Wealth inheritance ensures the continuity and growth of family wealth. Through proper planning and arrangements, assets can be effectively transmitted and utilized across generations, thereby maintaining and increasing the family's financial foundation. Transmission of family values. Wealth inheritance extends beyond money and assets to encompass family values and cultural traditions. By passing down wealth, families can perpetuate important values and life philosophies from one generation to the next, shaping the family's character and cohesion. Social responsibility and impact. Planned wealth inheritance also entails social responsibility and impact. Families can give back to society and influence societal development by establishing charitable funds, supporting philanthropic causes, and contributing positively to the community. Maintenance of family relationships. Wealth inheritance can help foster closer relationships among family members. By participating in the estate planning process, family members can deepen their communication and understanding, promoting harmony and unity within the family. Overall, the significance of wealth inheritance lies not only in asset transfer, but also in the transmission and continuation of family values, social responsibility, and family relationships. Through appropriate planning and execution, smooth wealth inheritance can be ensured, laying a solid foundation for the family's future. Basic steps of estate planning. Estate planning is the key step to ensure your assets are distributed and managed appropriately after your passing. Here are the fundamental steps of estate planning. Evaluate assets. Firstly, you need to conduct a comprehensive assessment of your assets. This includes listing your real estate, investments, insurance policies, retirement accounts, bank accounts, and other valuable assets. Ensure you have a clear understanding of all your assets, which will help you proceed to the next planning steps. Draft a will. Drafting a will is a core step in estate planning. Through a will, you can determine how your estate will be distributed among your beneficiaries. In the will, you can specify the beneficiaries of your estate, the distribution proportions, and any other special requests. Consider tax planning. Estate planning also involves considering tax planning factors. Understand estate taxes, gift taxes, and other relevant tax obligations, and take appropriate measures to minimize your tax liabilities. This may involve setting up trusts, making lifetime gifts, and utilizing other tax-saving strategies. Plan for beneficiaries. Identifying your beneficiaries is another crucial step in estate planning. This may include your spouse, children, other relatives, charitable organizations, or other entities. Consider the needs and circumstances of each beneficiary and adjust your estate planning accordingly. Update documents. Lastly, regularly updating your estate planning documents is essential. Over time, your financial situation, family circumstances, and legal requirements may change, so ensure your will, trusts, and other documents are up to date and comply with legal requirements. In summary, the basic steps of estate planning include evaluating assets, drafting a will, considering tax planning, planning for beneficiaries, and updating documents. By following these steps, you can ensure your assets are managed and distributed appropriately after your passing, thus safeguarding your family and your estate. Wealth inheritance and family values. Wealth inheritance goes beyond money and assets. It reflects the values and cultural traditions of a family. Here are the close connections between wealth inheritance and family values. Importance of passing down family values. Wealth inheritance serves as a crucial avenue for passing down family values through generations. These values include moral principles, perspectives on life, work ethics, among others, which significantly influence the character and behavior of family members. Educating the next generation on financial knowledge and values. Wealth inheritance also serves as an essential means of educating the next generation on financial knowledge and values. Through estate planning and family discussions, parents can impart financial management skills to their children, teach them responsible use and management of wealth, and instill proper money attitudes. Fostering family cohesion and shared goals. Wealth inheritance contributes to fostering cohesion and shared goals among family members. By participating in estate planning and family discussions, family members can collectively discuss and establish the core values and objectives of the family, thereby strengthening familial cohesion and unity. Preserving family culture and traditions. Wealth inheritance also encompasses passing down the culture and traditions of a family. This may include family stories, significant events, and traditional celebrations, among others. The inheritance of these cultural elements helps deepen the bonds among family members and maintains the family's foundation and identity. In summary, wealth inheritance and family values are closely intertwined, affecting not only the character and behavior of family members, but also reflecting familial cohesion and cultural traditions. Through proper wealth inheritance and estate planning, families can realize the transmission of values, laying a solid foundation of values for the next generation. Effective estate planning strategies. Achieving effective estate planning requires implementing a series of strategies and measures to ensure assets are distributed and managed appropriately after your passing. Here are several effective estate planning strategies. Establishing trusts. Setting up trusts is a common estate planning strategy that can help you control and protect assets. Through trusts, you can designate beneficiaries for your assets, ensuring they are managed and distributed according to your wishes after your passing. Lifetime gifting. Lifetime gifting is an effective estate planning strategy that can reduce the value of your estate, thereby lowering your estate tax liability. By gifting a portion of your assets to beneficiaries during your lifetime, you can not only enjoy the gift tax exemption, but also ensure the smooth transfer of assets after your passing. Ensuring adequate insurance coverage. Purchasing appropriate insurance is an important strategy in estate planning. Combining life insurance with estate planning can ensure your family has sufficient funds to cover daily expenses, debt repayment, and other financial goals after your passing. Updating documents. Regularly updating your estate planning documents is crucial. Over time, changes may occur in your family circumstances, financial situation, and legal regulations, so ensuring your wills, trusts, and other documents are up to date and compliant with legal requirements is essential. Seeking professional advice. Finally, seeking advice from financial advisors or attorneys is also a crucial step in achieving effective estate planning. Professionals can provide personalized estate planning advice based on your specific circumstances and needs, ensuring your assets are properly managed and distributed. In summary, achieving effective estate planning requires implementing a variety of strategies and measures, including establishing trusts, lifetime gifting, ensuring adequate insurance coverage, updating documents regularly, and seeking professional advice. By combining these strategies, you can ensure your assets are managed and distributed appropriately after your passing, protecting your family and your estate. Conclusion: wealth inheritance and estate planning are crucial for both individual and familial futures. Through estate planning, we ensure that our assets are managed and distributed appropriately after our passing, thereby safeguarding the interests of our families and achieving personal and familial financial goals. Throughout this process, we recognize that wealth inheritance is not merely about the transfer of money and assets, but also about the continuation of family values and cultural traditions. Therefore, estate planning should be integrated with family values. Through proper planning and communication, important values can be passed down through generations, deepening the connections and cohesion among family members. Furthermore, we understand that achieving effective estate planning requires implementing various strategies and measures. These include establishing trusts, lifetime gifting, ensuring adequate insurance coverage, regularly updating documents, and seeking professional advice. Only through the combination of these strategies can we ensure that our assets are managed and distributed appropriately after our passing, thereby achieving our financial goals and protecting our families. Therefore, it's advisable for everyone to start estate planning early, ensuring that their assets are managed properly and adequately, preparing for the future of their families.